I am Melanie the Realtor, and really all I want to do is help you understand how to buy a house so that when the time is right, you know what to do. If all of that sounds good, make sure that you go ahead and hit the subscribe button, tap that notification bell so that whenever I do release new videos, you see them first. Even before you're ready to buy a home, one of the first things that you need to start looking at and thinking about is your credit score. If you're not sure what your credit score is, you can check it once a year at annualcreditreport.com. That is the website that the government says once a year you can get a credit report from the 3 major credit bureaus. And there are 3, and you will have a little bit of a different score from each one. Now, why is that? That's because each credit bureau takes different details and different reports and kind of averages them all together to see what your credit score is. So if Experian has different details than TransUnion, then those scores could be a little bit different, whether it's 10 points or 50 points, and that's kind of a big deal. But let's talk about what your credit score is. So your credit score is basically a rating of how good you are at borrowing money and paying it back. Now, why is that important for when you want to buy a home? Well, most of us are going to need a loan when we buy a home. We're going to need a mortgage, whether that comes from a mortgage officer or a traditional bank or a credit union. Most of us are going to need a loan from somewhere, right? So the bank, when they're going to loan us the money, wants to make sure that we're pretty good at paying back money that we borrow. That's how the bank is going to make sure that they don't lose money, right? So the bank is going to pull your credit scores. You're going to have 3, and like I said, you have those 3 main credit bureaus, and the bank is going to use the middle score. So when you pull your credit score, if you have, let's say, a 720, a 690, and a 650, they're going to use that 690 because it's that middle score, okay? So that's your credit score. It's just a score of how good you are at paying money back. So let's talk about how else you can monitor your credit score. I told you about your free credit reports at annualcreditreport.com. You can also use tools like Mint or Credit Karma. Those are not guaranteed to be 100% accurate, but they should be in the ballpark of what you're looking at. What is considered a good credit score? Typically, 680, 700 or higher is going to be considered a good or excellent credit score. That credit score is going to get you into the highest and best loans possible. Lower than that, if you get into, the 620s, 630s up to about 680, a lot of times that's going to be considered fair. So fair means it's not awesome, it's not awful. And most times if you have especially a 650 or higher, a 620 or higher, there's still going to be loans out there that you can qualify for. You just may need to do a little bit of extra work in showing them that you are credit worthy, that it's safe to give you a loan and you will be able to pay it back. If you're under about 620, it gets a little tougher. FHA loans can go down to a 580, but a lot of times I notice when people are in that situation, it may have to do with things like student loans, and your debt to income ratio is going to be really high if you have student loans a lot of times. And so even if you have the right credit score, maybe you have a 600, if you have high student loans or something like that, then even though you have the credit score that qualifies, your debt to income ratio may be too high to qualify for a loan. So the best possible thing you can do is make sure that your credit score is as high as possible. When my husband and I were getting ready to buy this house, we spent a good 6 months to a year before that really working on our credit score, paying down our credit cards as much as possible, making sure all of our payments were on time, because paying on time and how much credit you are using based on what's available to you are what's going to impact your credit score the most. So credit score is going to be one of the first things that before you even apply for a loan, you want to be knowing your credit score, and you want to be working on your credit score to make your credit score as high as possible. So like I said, pay your bills on time. If you have credit cards that you are using 70, 80, 90% maxing out, you want to put yourself on a better budget so that you can pay those off and keep those balances low. There are other things that do matter to your credit, but not as much. So paying on time and the percentage of credit space that you're using actively are going to be the biggest factors in your credit score. So check your credit scores and then write down 1 to 3 things that you can do that can help improve your credit score over the next couple of months.